Welcome back, everyone. Doug Burson here, and last time we spent some time talking about things that we should be thinking about from a tax perspective this time of year. In other words, did you get what you wanted to on your return last year? Did you owe more than you thought, or did you get less of a refund than you thought? If you did, what have you done to change it? And I want to continue talking about that today. Some of the things we talked about last time were, did you get a new job? Are your W-4s calculated correctly? Did you get a second job? Sometimes that can cause some issues. Did you inherit some money? And did you take some money out of your 401k or retirement plan? Well, today we're going to continue that theme and take on a few more topics. So one of the things I want to talk about is if you did owe last year and maybe your income is self-employed or you're on pension income, have investments, different things, rentals, maybe you're doing quarterly estimates. Have you done your estimates, first of all? And if you did you change the amount? Now, if you're one of our clients, we will usually change your estimates based on the tax return. But did that happen? Did you up the amounts? Or more importantly, has some things happened in your life that your preparer didn't know when he calculated your estimates and they need to be adjusted? And it's not always adjusted up. It could be down and you could be sending too much money in. So I want to think about that on your quarterly estimates. Some of that you can review last week's video, but I'm going to talk about some other things that could cause us to want to change those estimates. So the first thing we're going to talk about on that line is your investments. In 2024, a lot of you have had a really good year. Your investments are up. They should be anyway because the market's done pretty good, but it depends on what you're invested in. But a lot of your investments are up. And depending on how you're invested, you may have a tax liability coming up that you didn't know about, especially if you're in mutual funds. It could be kicking out cap gains, or if you sold stocks and you don't have enough losses to offset it. So one of the things you want to be looking at right now is, how are my investments doing and what do we think it's going to look like by the end of the year? You can talk with your financial advisor about that, but those are some things you could look at. And am I invested in a tax smart manner? Maybe I shouldn't even be getting dividends if I'm not currently using them, and I should be in more of a growth model instead of an income model. Something to think about. But if we're generating a bunch of taxable income, then we're not using that income. Maybe we need to adjust our strategy. So that's one of the things that happens quite often when I'm doing the tax return. They had a good year in their investment account, and they didn't think about it from a tax perspective, and all of a sudden now we owe an extra $6,000, $10,000, whatever it is that we weren't anticipating. So make sure to take a look at your investment account. Next, I want to talk to you people who are self-employed. This one gets people quite often, and it's pretty easy to check, but we need to make sure that we're maintaining accurate records. It's so important to have good records. We do this for a lot of our clients. We do the accounting for them so that we have good records so we can help them stay on top of this. But are your books up to date? It's so critical for so many reasons, not only for just doing the taxes, but also for managing your business. Is my cost of goods sold getting out of control? Is my labor getting out of control? All these different things. You need to make sure your records are up to date, because if they're not, we can't even really have this conversation, and you're flying blind from a tax perspective. Because as we get into the third and fourth quarter, we want to start thinking about things like, should I be buying a truck? Should I be buying a trailer? Should I be, whatever it is that affects your business, is this the right year to expand? We don't know that if we don't have good numbers. So it's very critical that you have good numbers. Now that you have those good numbers, what do we do with them from a tax perspective? One of my favorite reports that we have within our financials that we give out is a year-to-date and a 2-year comparison. Okay, so if last year through the end of June I've made $50,000, and this year I've made $70,000 through the end of June, maybe I need to talk to my accountant about adjusting my quarterly estimates. Or maybe we need to start considering maybe this is the right year to upgrade some of our equipment. We need those good records. but the year-to-date comparison, year over year, will give you a good indication of what your tax liability is going to be next year. It could also let us know if maybe we should up our retirement. So year-to-date comparison, I can't stress that enough. It's one of my favorite reports, is this year through June versus last year through June. Take a look at that. That'll quickly give you an idea of how you're doing without overstressing about all the details. Just look at it. Now, once you've looked at it, if you're at $50,000, but you know you've got a bunch of expenses that just haven't been paid yet, you know that. Don't panic, but just use it as a gauge to give you an idea. And if the numbers are up or if they're down can be really important too. Maybe we're paying ourselves too much salary for the income we have this year, or maybe we should be paying ourselves more salary based on the income that's going on this year. Especially if you're an S Corp, these can be very important things to think about. So I'm just trying to give you things to think about here, and if any of those mean something to you, maybe it's time to talk to your accountant and take a look at that. Okay, back to individuals. One of the things and strategies that's really been big the last few years is the idea of a Roth conversion. And what are we doing there? We're converting money from our individual retirement account into a Roth. Why would we want to do that? Well, I don't know about you, and I'm not talking politics here, but the way our country is spending, you have to think that at some point, at least I do, taxes probably have to go up. And if they go up, I don't want to have to pay a bunch of tax on my retirement account, but it's bigger than that. There's so much going on there. When you get into retirement, we want to have money in multiple buckets so that we can control our tax situation. We can do that more when we're retired than in any other time in our life. And there's a lot of reasons to do it. One, our tax brackets. If we have money that's not taxable, we can lower our tax. But also there's other things that are going to creep up on you once you get to Medicare called IRMA, IIRMA. And if you make over a certain amount of money, your Medicare premiums go up. So this is another reason we want to manage our income in retirement. And so one of the ways that we can do that is by converting our IRA, traditional IRA, into a Roth. But we got to be careful about that. And we'll talk about that more in another video, but just simple, if you're in a 12% bracket this year and you've got maybe another $10,000, $15,000, $20,000 till you get to the next bracket, maybe this is a really good year to convert some money and maximize that bracket and pay a really low tax rate now, so that when we retire later, it'll be tax-free and we can manage our tax brackets. And it might even make sense if you're in a 22, 24% bracket. You get much above that and the Roth conversion starts getting hard to pull off. But I just want you to be thinking about these things. Is this a good year for me to start doing Roth conversions? And what is my strategy for when I retire to manage my income? This is a good time to do it while rates are still low. The end of 25, at least for now, the Tax Cuts and Jobs Act expires, and tax rates are at this point scheduled to go back up. Will that happen? I don't know, but it looks like right now that it might. So maybe 24 and 25 are really good years, maybe the last 2 years, to take advantage of some of these really favorable tax brackets. Now moving on along this same theme, if your business, so this is back to you business owners, if your business is having a good year, this is a very, very important time for you to look into setting up a retirement plan if you don't have one right now. Or maybe it's a good time to look into changing your retirement plan if you haven't already contributed to it this year. The deadline, the time is running out for when we can do that. And we'll probably talk more about that in another video too, but I want to bring it to your mind now in this video because it's relevant. We can't wait till December and have every option available to us as far as what we can do on our retirement. And we definitely can't wait till we file the tax return next year and have all the options. There are some that we can do all the way up until April 15, but not all of them. And so maybe this is a year we should do a solo 401k, or maybe we should set up a regular 401k for our entire business. Maybe we should be doing a SEP, maybe we should be doing a simple. Like I said, not the time for that fully in this video, But some of those options we start to run out of time for here pretty soon. So we need to take advantage of it. So if our income is up and we do want to go ahead and try to manage our taxes this year, it's time to look at it now. So once again, go back to that year-to-date comparison. Is my income up? Do I think it's going to stay up? Do I have some additional money that I would like to shelter from taxes? If you do, we need to start talking about it now. And you can call us. We can discuss whether it makes sense for you right now from a tax perspective. But it's something you need to take care of right now to make sure it gets done on time. So there you have it. There's some quick tips. Some of those are bigger topics. We'll talk about them more on a different video. One of the ones I have lined out to come up soon is RMDs. Some new rules happened in the last couple weeks. The IRS came out with some new rules on how inherited RMDs are going to be handled. It's important you know how those work, so we'll talk about that. A lot of other things coming, so I'm going to try to get some stuff to you. If there's anything that you would like to have discussed, go ahead and drop that down below. Once again, please subscribe. We're trying to do the best we can to help you, but ask questions. Maybe I can leave you some answers down there, or maybe there's some topics that I haven't thought about that would be useful to you. And the whole reason I'm doing this is for you guys. So once again, that's all I got, and we will talk to you soon.